Hello everybody, this is Eddie Gabor, Managing Partner of Key Advisors Group, and today I want to talk about why the saying cash is king is so prevalent when you are managing assets or managing your own money in regards to building portfolios, okay? There's a reason why that saying was established many years ago, and I'm a firm believer that whether it's cash or cash-like vehicles that you have in your portfolio, that is something that many people don't talk about a lot. And I think the reason why is it's not real sexy. There's not any upside to those types of conservative investments. But if you think about it, especially when you look at years that we've seen over the last decade here in the market where there's a lot of volatility, right? And sometimes you'll see someone like myself come on TV and say, well, we think you should buy this dip that we've had in the equity markets. You know, whether it's a 10% dip, 15% dip, 5%, whatever it may be. And that sounds all well and good, but then the question as an investor is, what are you going to buy it with? You know, if you're fully invested in high beta stocks and you see a big dip in the market and you want to be able to take advantage of that dip, if you don't have something in your portfolio that is a little bit on the safer side that you can raise cash from to buy that dip, it really doesn't do you any good, okay? And so saying buy the dip sounds great, but look at your portfolio. If we were to see a 20% drop in the market right now, do you have anything in your strategy that would allow you to raise cash from to be opportunistic for these major drops? Because I'm a firm believer when you look at wealth accumulation that some of the best investors that have accumulated a tremendous amount of wealth, how they've been able to do that is during recessions and during tough time periods. So they have cash or cash-like instruments or other resources that enables them to be able to buy a distressed asset at a very low price. So I think a mistake that many investors make is they're fully invested, it's full risk on at all times. I know with my own personal account that I trade, I try to make sure I have anywhere from 10 to 20% of my strategy in something that I know, or at least my opinion is, if the market drops, that we won't see as big of a drop in that asset, and I can sell that asset to buy the dip in something that's really crashed. And whether that's cash, whether that's some type of fixed income. Now look, there's time periods, I know myself personally, where I've been fully invested because I just think that the market has just taken such a beating that the risk reward is just so high that I'm willing to be fully invested. And then when we see a big spike, I'll go ahead and trim some profits and put some money on the sideline, okay? And then I have other strategies that are more passive that I stay fully invested and let them grow. So I understand within my own personal portfolio and client portfolios that there's some part of the strategy that's going to be really actively managed, maybe more on a shorter term market thesis. And in those types of portfolio strategies, cash is king, or cash-like investments are king. Because again, if you don't put yourself in a position to be opportunistic, how is a drop of double digits or massive proportions in a risk asset going to benefit you? It's not. And so when you look at any market crash or any recession, if you had the ability to buy during those time periods, you would have grown your wealth exponentially. Of course, you need to have the risk tolerance and the guts to do that, because the toughest time to buy is when everyone else is selling or when the world looks so gloomy. But I guess that's why that term buy fear and sell greed that Warren Buffett has phrased so well really holds true. But at the end of the day, you can't buy that fear if you don't have cash in your strategy, okay? So I'm a believer that for some part of your portfolio that you're actively managing, you shouldn't be fully invested and fully in high beta plays, because at the end of the day, not only will your volatility be extremely high, but you just can't take advantage of market moves the way that the pros do. Some do it better than others. Hopefully with these videos that I push out, I'm educating you on different things to look for to be able to know when maybe you need to increase your weightings in a particular sector. So that's it for today's quick video on why cash is king and why I believe being fully invested at times is not a recipe for success.